Okay, so picture this. It's a single day in March 2026, and the financial markets are telling two completely different stories. It's kind of wild. In one corner, you've got total chaos, right? All fueled by old world energy and geopolitical drama. But in the other corner, you have this unstoppable demand, driven by the new world of artificial intelligence. So let's dive in and break down what this really means for investors.
I mean, think about it. One part of the market is getting completely whipsawed by rumors and official denials, while another part is just surging ahead like it's on a different planet. So, where is the smart money actually going in this new landscape? That's the billion-dollar question we're going to dig into. All right, first up, let's talk about the story that was dominating all the headlines: absolute, total mayhem in the oil market. This was just a classic case of geopolitics sending shockwaves through the global economy. You know, the phrase that just perfectly nailed the day's mood came from the Raffles Market Update, which is a go-to for a lot of traders. They called it the oil whipsaw. And honestly, that's the perfect description for those violent minute-by-minute price swings that had everybody on edge. So what was actually behind all this craziness? Well, it was a classic case of getting mixed signals from the very top. First, a report comes out quoting the U.S. Energy Secretary, and it suggests American warships are going to start escorting oil tankers through the Strait of Hormuz. The market hears that and reacts instantly. Crude prices plunge. But then, just minutes later, the White House comes out with a flat denial, and boom, prices shoot right back up. Just pure confusion. And this chart just brilliantly shows you the split reaction across global markets. In the US, the S&P 500 dipped a bit, but look at Europe. The German DAX surged almost 2.4%. So why the huge difference? Well, European markets are super sensitive to energy prices. They rallied hard on this hope that the International Energy Agency was about to release a record amount of emergency oil reserves, which kind of calmed down all those inflation fears. Okay, so while the whole old economy was in a state of turmoil, a completely different story was playing out in the world of tech. It was like this powerful new economic engine was just humming along, totally unfazed by all the geopolitical noise. After the markets closed for the day, this one number told the entire story, a massive 10% surge. And this was the after-hours stock move for the tech giant Oracle. So what was behind this incredible jump? Well, it was all about the absolutely insatiable demand for artificial intelligence. Oracle's cloud revenue didn't just meet estimates, it crushed them. And the company raised its forecast for the entire year, pointing to this powerful AI compute demand that showed zero signs of slowing down. This brings us to a concept that really every investor needs to get their head around right now: the AI capex cycle. And look, this isn't just hype. This is the very real multi-billion-dollar wave of spending by corporations on the essential physical stuff. We're talking data centers, cooling systems, and especially the chips that AI literally cannot run without. This is a long-term structural build-out, not just some short-term trend. And hey, this isn't just an Oracle story. The report also pointed out that Nvidia, the undisputed king of AI chips, is pouring a significant investment into a new AI startup. So the really crucial takeaway here is that the biggest players in the game are signaling huge long-term confidence in this massive AI build-out. So this whole tale of two markets, it basically gives us a new playbook for how to think about our portfolios. It's highlighting this growing split between the physical, resource-based economy and the really resilient digital economy. This table just lays it all out so clearly. On one side, you've got the energy-intensive sector. It's driven by geopolitical headlines, and it reacts with just extreme volatility. Meanwhile, you have the AI infrastructure sector. It's driven by fundamentals, right? Things like cloud revenue and these long-term spending cycles. And it's showing incredible resilience. Its growth isn't tied to the daily news cycle. It's tied to a fundamental technological shift. So what are the pros actually keeping an eye on in this kind of divided market? Well, we've boiled it down to three key signals that you really need to be watching right now. First up, inflation data. A hot number there could put the Fed in a really tough spot, forcing them to choose between fighting inflation and propping up a slowing economy. That's that stagflation dilemma. Second, all eyes are on the oil market to see if the IEA can actually follow through on its promise of a big reserve release to calm prices. And finally, the AI signal. Oracle's fantastic quarter is being seen as a really strong confirmation that the AI investment cycle is alive and well, which is just great news for the entire AI ecosystem. You know, all of this leaves us with a really powerful final question to think about. In a world that seems to be more and more defined by physical conflict, supply chain shocks, and volatility in things you can actually touch,
Is the digital infrastructure that powers our future becoming the ultimate safe haven for investors? Something to chew on.